The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 26th terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go try to figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Internationally, you can give us a call at 727-445-1044. And you can go ahead and send in an instant message inside the Tiger's Den. Send me an email, steve@tfnn.com, and I'll be happy to assist you in any way that I can. So let's get this terrific Tuesday edition of the Trader's Edge show on the go out here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down about 8 points, so S&P is flat. She's trading at 2088. NASDAQ composite off 12 points at 4882. Russell 2000 is up 9 points out here. We've had the Russell moving higher while the markets have been gradually moving lower. Yeah, the DAX closed down 34 points. The FTSE closed up 23. Gold is up $2. Silver's up 8 pennies. Light sweet crude is up $1.32. She's trading at 43.96. Leading the charge here to the upside dollar-wise, individual stock-wise, that is Pioneer Natural Resource up $11 and change. That's up 7.5%. You've got Tenneco Inc., TEN is the ticker symbol. It's up 10%. That's trading out at 55.89. Asbury Automotive Group, they're up nearly 9% of $5. Cimarex Energy up nearly 5%. That's $5. Concho Resources up 5. I suppose with light sweet crude trading the way that it is, that would make a lot of sense. To the downside, Whirlpool is the leader dollar-wise. That's off nearly $8, a little over 4%. Amazon is off $8. That's down a little over 1%. Google's off 8. I'm rounding them up. Everest Group down about 7. Intuitive Surgical off 7. Okay, so where do we begin? What is the most important element for us to be watching today? Just one thing, Curly. Well, that one thing, I'm going to say it's going to be dependent upon where the NQ closes when that contract closes later this afternoon. And why? Well, if you're watching us on TigerTV, because the NQ, the NASDAQ, has had the largest decline, if we're going to call it a decline, but it has the largest decline over the course of the last 5 days. Enough of a trend, enough of a decline that it's established a bit of a trend, that trend being to the downside out here. Now, yesterday, what we noticed, what we watched, what we looked at, what occurred at the end of the trading session was one of your favorite candles in mine, a little hammer candle out here. Here's the candle session. You can see you've got a nice, very tiny body. You've got a nice lower shadow and just a very tiny little upper wick there, enough to go ahead and light the candle. And that candle will be lit to the downside if you see it close below that, because you know the expression as well as I do. If you're long, you're wrong when you have a close below a hammer candle. Now, what is also nice about yesterday's hammer candle and about that low, which is right around the 44.40-ish area. Actually, the exact number to be paying attention to is going to be 44.36. 44.36. That's the number to be watching here at 44.42. We don't know whether the hammer's just going to be tested at this stage here and act as support. It could. You've also got your TAS market profile right down there, so that's another nice thing. But if you do get a close below 44.36, not a move below, a close below, then that should set off. Now, that should really set off the move to the downside. You may say, well, where's that move to the downside? Let's go take a look at it. We don't have that in place just yet. We just know we've got a hammer candle, and we'll try to piece this together for us. Let me switch over here to the daily time frame. That was a daily time frame as well. But this is going to be my 4-panel view out here. You can see it as well inside of this. And so the question becomes, where is price going to head to? Well, first let's just look at retracement levels. And here's the key. Really in this case, probably today it's going to be mostly about Apple. I wouldn't say all about Apple, but we'll say mostly about Apple. Now, from the low to the most recent high out here, we'll look at it to the downside as well as to the upside. If we see a close below the hammer candle, the very first target becomes 43.10. And you're at 44.42, right? So that's 100 points to the downside. The next target, which would be the likely target, is just simply a 0.618 retracement, taking you to 41.41. Now, it's not an overnight thing out here, or it likely is not an overnight thing out here, but we really want to watch. And it doesn't have to be tonight, right? You could have this hammer candle hold. You could have not too much market reaction to Apple out here. And then overnight, you could see it close below that. But right now, price is up against support. And it's good support, by the way. Why? Yeah, this nice little bullish engulfing candle right here in the trading day of April 12th. So we've got that. You've got yesterday's hammer candle. You've got two, in essence, the daily market profiles that are just sitting right out there for support. And we had light volume. I think we probably have light volume today. We'll take a look at that. So this is really a key level. And it's really all going to be about the NASDAQ. If we take a look at the ES Mini as an example, you can see it's trading up towards the top. It's not trading out towards the bottom of its box out here, although it does have resistance in 2097. Oh, and before not so fast out here with regard to the NQ, let's assume that the market says, yeah, this was support. I was showing you this was support. I couldn't have knocked on your door any clearer to tell you that support was in this 44.40 level. And if, in fact, the market responds well, Apple drives things higher. It's not the, this is the new Apple, not the old Apple out here. And in the case of the new Apple out here, maybe the NQ gets back to 44.94. Maybe it gets up to 45.63 out there, the top of that box. So that's on the bullish side. The bearish side is a close below that hammer candle. Until that happens, price is up against support. Now, with regard to the Dow futures contract, no big deal out here. It's also trading up towards its highs. Levels to be watching there. To the upside, 17,953. To the downside, 17,695. The Russell 2000, it's got a mind of its own out here. It is saying, I will have none of this action to the downside. Now, maybe the anticipation there is just simply that when the Fed releases their minutes tomorrow afternoon around 2 o'clock, that it's just going to confirm that interest rates are not rising this time around, maybe not until later. When that later is, I don't know. But right now, because the small caps would be the ones potentially, with regard to indices, perhaps most affected, impacted by increased interest rates out there. But the Russell 2000 is saying, I will have nothing to do with any of you folks that are thinking about lower prices out here. The Russell 2000, the futures contract, wants to trade to 1178. We get back for this break. Let's go take a bite out of the apple. Let's go see what it could do to the downside as well as to the upside. Steve Rhodes, TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 6, S&P is up 1. We've got a couple of special requests out here, which I like special requests. But first, we're going to go take a look at Apple. Let's take a look at bullish case, bearish case out here, and see what it's doing. Because, you know, it should have an impact inside of the NQ. That's going to be at 4:30. If we take a look at what Apple is doing right now, we know that yesterday, as we took a look at Apple, that it was pulling back into a breakout area, doing it with light volume. You say breakout area, what are you talking about? Well, what we're referring to is on the trading session of March 15th, we saw Apple gap up. That gap creates a breakout area, a break to the downside, a breakdown area out here. And that moved higher with 40 million shares. Yesterday's move to the downside was with 28 million shares. Today, you're at 21 million shares, so we have a bit more volume. Let me see if I can do my calculations on it. So we're at 21 million shares. We've been trading for nearly 4 hours, right? So at the 4-hour mark, that would give us about 34 million shares to the downside. So as we know right now, Apple is still pulling back into a level. Hasn't really tested it. I don't think 103.85 would be a test. The low today is 103.91. So we don't really have a test of that gap. And it could either be a test of the top or the bottom of the gap. The top meaning the low of March 15th. The bottom of the gap being the high of March 14th. I know that maybe sounds a little bit, that's like saying, no, I won't go there. But in any event, it is what it is. Market's moving higher, so the top of the gap is a candle where it gapped up from. The bottom of the gap is the candle where the gap occurred out here. So we do know that Apple is pulling back. Now, what's likely to happen is I don't anticipate at this stage of the game, with it being 1:20 in the afternoon, that what you and I are going to see is this thing move down with any kind of vengeance. And that means that what Apple is actually doing, it's leaving this open gap out here. So if we go ahead and just simply delete those lines, those yellow lines, we can always put that in here. Here's what we know. We know the following. I'll put this on a monthly chart first, so we'll just take this step by step. As we take a look at the monthly chart out here, was it monthly? Maybe it was weekly. Well, we look at the monthly. Here's the monthly chart. What we know is that Apple, at least along the top side, you can see clear descending price channel line. Now, we're using the open or close of a body. In this case here, each of these happen to be the opens of the bodies out here. That's the red line, the red diagonal line that is on my screen when we switch over to the daily. So we know that Apple has most recently bounced its head up against resistance. That's that descending price channel line. Couldn't bust it up. It did go ahead and gap down on the trading session of April 18th, 60 million shares. So it's kind of said, hey, I couldn't bust it up. I'm going to go ahead and try and bust it down. And there's your big volume day inside Apple. Well, now what you've got out here is you've got the potential. This is to the downside action. You've got the potential, and that's really what Apple is leaning towards at this stage of the game, right? We know it's been in a downtrend, for quite a while. It couldn't bust it to the upside. The very first move to the downside to get back inside that price channel was with volume. Now you've got this little yellowed area, this little yellow box area that takes you in essence from March 15th through today, and because the market's going to close out here before Apple releases their numbers at 4:30 this afternoon. If the market responds badly and this gaps down, you will now have an island top reversal pattern inside of Apple. That would be very bearish. What would that say? That says you at least go down to the bottom of that price channel, but more likely than not, in the case of Apple, where it says you head to this swing point, right? You're already trading inside the August 24th swing point. All right, so the August 20, that's the yellow line now that's going across my screen out here at 108.80. Yeah, you're coming in with light volume, but it's absolutely going to be light volume. 162 million shares are traded on that day. When you're inside a swing point, it says, hey, you may go test the bottom of it. So bad news bears would be the market responding poorly to Apple, gapping down tomorrow morning, never closing that gap during the day. And that says that Apple would trade down to $92. That's the bearish case out here. What's the bullish case? The bullish case is that it's trading right into a level of potential support, which it hasn't tested. So you'd really, on the bullish case, like to see that get tested. And then price does what? Well, price heads back to this other gap that just took place 6 trading sessions ago or so. And that says that resistance inside of Apple, down upside, is probably the 109.73. At $5. So you got $5 to the upside in the case of Apple, and you've got messages that say $92. That's about $12 or so to the downside, right? Yeah, about $12, something like that, to the downside. So is it all about Apple? No, but with regard to that NQ, that'll go ahead and bust the hammer candle to the downside. Do I know which way it's going to resolve itself? No, the answer is no. But there are enough clues here. The preponderance of evidence, as we speak right now, I have to say, is leaning more towards the bearish side. We'll see whether or not those messages were valid or not. That's inside Apple. Okay, now let's get to a few requests out here, some special requests. I think the first one, let me go back and take a look here. What was the first one? What was the first one out here? Sorry about that. Looks like it was the first one GE. No, I think the first one was about, could I take a look at the TBT? So in order to take a look at the TBT, which is, I believe that's a mix of the 20 and the 30-year Treasury out there, let's first start with the underlying instruments. Let's take a look at the 30-year Treasury. Now, what I'm putting up on my screen here is the continuous contract. But the reason I'm putting that up there is because I've built a new indicator that's really cool. It's really helpful in identifying what the market wants to do. And if you're watching us on Tiger TV, you're going to see 4 different colored lines in the price area of my chart. What I want to show you is what really the red, green, and blue. Now, if I put it in white, you wouldn't see it. It'd be invisible because I've got a white background here. But the red, green, and blue lines, you can see right now, try to explode this up a bit, you can see that these are getting ready to kiss and tell. Now, when those 3 lines connect, and they will connect out here, they'll connect whether price moves higher or price moves lower in the 30-year Treasury. But oftentimes, when those lines cross, what you will see is you'll see a pause. It doesn't have to be for a long period of time, but you'll see a pause in price out here, and that's with regard. And we'll find maybe something similar with the TBD, but it's really going to be this instrument here, the 30-year Treasury, that you would really be focused on. Now, what typically will occur when that little convergence occurs out here, price will pause, and price typically comes back up, in this case here, to the red line out here. And it'll come back and test it. If it can get back above that, it says the move to the downside was over. But that would become your next sell point. So for those of you that are in the TBT, I would say now is too late to enter that trade, especially because of this convergence out here. And the place where you would enter, because you'd always be looking at the underlying instrument, would be once we get, that doesn't mean there's not lower price ahead right now, but it's just too late, I would think, to enter that trade out here, to wait for this little pause. Now, that pause can be a one-day pause, but typically price will get back to go ahead and test that level out here, the 163.75-ish range, it looks like, on the 30-year Treasury. Here's a more recent little convergence right here back on January 11th. January 11th, we saw that little convergence out here, and then the very next day, what did price do? Came back, tested that little red line out there, and that's an important red line, and then went ahead and moved higher. And that was a signal that price were ready to move lower. You can have the exact opposite thing take place inside the 30-year Treasury. I'll hit the TBT button out here, and we'll see the same kind of setup. The convergence not there just yet. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 4 points. So we were taking a look at the TBT for Duffy in the Tiger's Den earlier. Now, again, you're taking a look at the same set of lines on my chart out here, but it's really going to be the underlying instrument, the bond versus the TBT. But we can still use it. You can see those lines, red, green, and blue, coming together, trying to converge. And Duffy says you're in at 35 out here. So it's trading out at 38.43. So let's take a look at what else we can find out for you about the TBT. Now, in the case of the TBT, we've got our daily profiles, daily and weekly profiles out here. And as I said, it looks like to me the decline in bonds, which means the rise in the TBT, is starting to get to a point where it should pause. Well, interestingly enough, if we take a look at our weekly TAS market profile, a hidden level, not hidden to you, but a hidden level of support or resistance, in this case here, resistance, you're at 38.85. So that's about another 41 cents to the upside from where it's trading at right now. I would expect or anticipate that that becomes a level of resistance out here. Now, does that mean you exit the trade? No, not necessarily. You're in at a good price out here. I don't know whether it's a longer term type of trade, but you don't have any, you would, when you get that convergence, okay, if we get a pause and you've got a continued move lower inside the Treasury, TBT will move to the upside and take out this resistance level. And we really won't know until we see that convergence happens which way this is going to resolve ourselves. But at least we know what to be watching for and looking. Now, if this were to resolve itself to the TBT to the 30-year Treasury to the downside, TBT to the upside, we can see we have a consolidation pattern out here. I haven't drawn it exact, but it's close enough. And any break to the upside in TBT, break downside in the 30-year Treasury, says you've got $42. Our measured move equal to or greater than the measured move of that consolidation level. So, I think it looks to me like you're in a good trade, and I wouldn't do a thing with it until I saw how the Treasuries were actually going to go ahead and respond. Of course, you'd always keep stops in place. So hopefully that assists you with at least Stevie's take on the TBT. Now, we had a request to go take a look at GE, and the question was entry price on GE. And if we go ahead, we'll just come back to this chart out here for the moment. We're taking a look at our same lines out here. And no, these are not moving averages. Two of them are, but the other two are not. If we take a look at GE, here's your little convergence out here. I try to draw a box, but I've got to find my box tool. Give me the box tool. What's the box? Rectangle. Yeah, control function 12. Well, that's easy to remember. But here's your little box. Here's your little convergence out here. See how price came back and tested that red line out here? We don't know where that test is going to take place, but it typically happens. You test it, you reject it. It says that price is going to move lower, which is exactly what occurred out here. Here's your next control function 12. Let's see out here. Hey, let's see if I can do it. Here's your next little convergence, right? Price moves higher. It eventually comes back and tests it, right, at a later date out here on March the 10th, and then moves higher. That line acts as a level of support. Now what we're seeing in the case of GE, we're seeing a crossover of these two lines out here, this red and black line. That's not a bullish sign in the case of GE. This says that, so where's GE going to move down to? It's already giving you the signal that it wants to move lower. Let's go put that on this chart here and take a look at daily and weekly profiles. Let's see if we can figure out what levels of hidden support might be out there. Let's take a look at some volumes as well. Easier to do that. So we can see that the next move to the downside in GE is very likely going to be to 29.86. You can see that should be a decent level of support. Why? Because our point of control, which thus far has stabilized and held the closing price of GE, which is priced out at 30.59. The level's been tested. It has been rejected. But more likely than not, because of the established trend to the downside out here, this says to me more likely than not GE ought to make its way down to 29.86. Now, does it hold at 29.86? I don't know. There's a potential A to B equals CD that we can take a look at. Your swing point that we're identifying as a trading day of April 7th, which had volume of 33 million shares, and down there 56 million 2 days ago, and yesterday 35 million shares in a market that had light volume. So GE is signaling to you and I that it wants lower price out here, just simply simply volume. It's been knocking up against heaven's door, and eventually it will get through heaven's door. Well, maybe it's being knocked down to the other side of heaven, not so heavenly out there. Your 1-to-1, A to B equals CD inside of GE gets you to the bottom of that TAS Weekly profile. 29.81 would be the exact 1-to-1, but 29.86 is the bottom of that weekly. You crack that level, and price will move down. Let's take a look. We'll go ahead and set up perhaps a Gartley buy pattern. That Gartley buy pattern would take place at around 28.99. So at this stage of the game, what GE has given you, I think you've got to wait until 29.86, and the better buy in GE might be around 28.99. And that is what Steve Osan says out there. So that's GE. What we also know about GE, well, there was a question. Oh, we were taking, like, somebody posted something about the IWM. Maybe I was making the comments, the true comments, that the IWM is saying, I don't really care what you other guys want to do in the market. And somebody wrote in correlation between Russell 2000 and oil. Now, look, there's a absolute correlation, whether it's Russell 2000 or it is the S&P 500 or it is the NASDAQ out there. There is absolutely a correlation. We know that correlation. The easiest way, just take a look at this one here. Here's our ES Mini and our light sweet crude. This will accomplish the same thing. And we can see, for the most part, the directional correlation that exists between the two of these. With regard to light sweet crude, by the way, it is likely going to trade up to 44.49. Here at 44.03 right now, there's nothing that says that it really shouldn't. At 44.49, that happens to be the top of its daily TAS market profile. Perhaps it finds resistance there. If you bust through that level, it's going to be harder for this market to find any real energy to the downside with light sweet crude moving higher. So that would hold true for the IWM, for the Dow, whichever correlation. The ES Mini, much easier correlation, certainly for me to pay attention to, just because patterns and things of that sort. But if we do take the correlation that I was most interested in, and I didn't do this yet, but as soon as that message was typed into the den, I said, oh, somebody's already thinking like I am. And that's really the correlation between the Russell 2000 and the NDX 100 out here. And that's what I've got up on my screen. Now, we're doing this live, so here's what I'm looking for. I'm looking for divergences when one moves in one direction and the other moves in another direction to see, can we figure out, is there enough data, is there enough information to help us identify, like for my cousin Vinny, which is the leader of the pack out here. Yeah, logically, you'd think that it's the NDX 100 out here. I don't know if that is the case or not. So let's go ahead and turn on our line tools. We're going to go ahead and make this colorful chart. We'll put our red line out here. So in this case here, we can see the Russell 2000 basically moving sideways up here. Previous double top-ish type pattern. This is, when I say here, I'm referring to the time period of November 6th through the time period of December 1st. Now, remember, when I'm looking at this, I'm looking at closes. The line tool is only going to show me the closing price on the day that we're looking at. Now, from that same period of time, we basically had a similar kind of pattern inside of the NDX. So we don't have a directional divergence there to speak of. We'll keep searching for them. I'll search for a few during the break, and when we come back, we'll take a look at it. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So before we went to that break, we were taking a look at trying to find some correlation, see if there's even one that's out there between the Russell 2000 and the NDX 100. Why? Because the NDX 100 has given us topping patterns. The Russell 2000 has not. And as we take a look at these two charts, I wasn't able to find many, so we're not going to have a huge sample size out here. Here's what I could find. Back in the time frame of June of 2008 through September of 2008, what we saw was Russell 2000 basically form a triple top type pattern out here. But what we saw inside the NDX 100, that's the bottom panel on my screen out here, we saw the NDX 100 do is what? We saw the NDX 100 have lower highs out here. And the market resolved itself in the direction of the NDX 100. If you take a look at the 2009 lows that were formed from the time period of November in 2008 through March of 2009, we saw the Russell 2000 make lower lows, where we saw, on a closing base, we saw the NDX 100 make a double bottoming pattern. The NDX 100 was the one that was going ahead and generating the message for us back then. Fast forward, maybe somebody else will do some additional work out here. These are the ones that just easily showed up that I could see. If we take a look at the time period here between August in 2015, right? Remember August 2015, market moving lower pretty big, and September of 2015, what you had was the Russell 2000 making lower lows out here, and the NDX 100 doing what? Making higher lows. Who won that battle? What was the piece of information? Well, it was the NDX 100. So now, fast forward to where we're at today. It's very clear that the Russell 2000 is making higher highs. Even today, at the closing basis, I believe it's at a closing high above the one from April 22nd. Of course, it's not closed, right? So I can't really say that. But we can clearly see the divergence out here, whereas in the NDX 100, the move is to the downside. So what does this mean? As I say, we got about 4 or 5 data points out here, but I think this is the more important correlation for us to look at. Light sweet crude in the general markets, that's cool. You know, whether whatever indice is out here. But with regard to this one, this says that the Russell 2000 is going to go ahead and resolve itself in the direction of the NDX 100, especially if not especially, but if Apple does gap down, forms that island reversal, you know, that's going to should likely go down and test the August 24th lows out there, and that ought to put a bit of pain inside of the markets out here. Does that mean it's over? We're getting to sell in May and prices are going to? No, that is not my take. My take is it's gonna mess with our heads out here. Well, it's not going to mess with my heads out here. We're going to see the markets move lower, but it's going to form a buyable bottom. It's going to form a buyable bottom that is then going to take us higher, and then that's the one that we'll want to watch. So it could probably come the middle of July. We covered all of that yesterday, so we don't want to go through that today. We'll cover it as it unfolds, if in fact my prognosis is correct out here. With regard to the Russell 2000, am I seeing any patterns out here? That's the question I would be asking. I'm asking of myself. Am I seeing any patterns out here that suggest that the top is in? And the only thing that I've got, and this is with regard to where price has made its way to today. I'll put up a 30-minute chart of the futures contract. Now, remember, I've got a 10-minute delay out here, so but it hasn't changed substantially. As price was making a high back here at 6:30 in the evening back on April 24th. Today's the 26th, so 2 days ago. It had that nice little price relative strength divergent pattern out here. Price went ahead and moved lower. Since then, we've had a bounce. So price has bounced. It's made 100% move by getting back to those highs. Again, a 30-minute chart that we're looking at. This is the futures contract, and so that could be the extent of the move out here. Maybe it's not going to do much more today, and it too is going to wait to see. Maybe it's taking its lead because it knows that the NDX may have sent a memo to say, hey, you're getting out of lockstep here, and be careful. No, the NDX will absolutely turn around. Absolutely. It may turn around if Apple, somehow and Apple's full of surprises. Their surprises are always to the upside out here. So, it'll be interesting to see how today plays out. If we look for other clues inside the market, so hopefully that helps you out as well. And whoever posted the correlation, thank you, because I had been meaning to do this and hadn't done it yet. So everything happens for you, not to you, is the way that I look at it. If I take a look at the advanced decline oscillators out here, see what their message is right now, the only one that has a bearish connotation to it is going to be the Dow. The Dow is trading below the zero line out here. This is day one below the zero line. Somebody might look at this chart and say, hey, that looks like a hammer too inside of the Dow. And you'd be absolutely right. It looks like a hammer, but it's not a hammer candle. Why? There is not enough of a decline in place. In the NDX 100, we've had enough of a decline. In the case of the Dow, there hasn't been enough of a decline out here. But nonetheless, right now where it's trading, it's the first day for sellers to really try to, use their muscles out here and try to curl price to the downside. We don't have that same message inside of the NASDAQ composite. It's still above zero out here. There is no chance for an island top inside the NASDAQ composite out here, so it won't be affected with regard. But the NDX 100 already has that pattern. There could be an island top inside of the New York Stock Exchange. So New York Stock Exchange has been strong like bull. The island, by the way, I believe there is. Let's see. The top of the trading day of April 18th is 10.304.22, and the low of yesterday 10.424. So there's a definite gap out here, and if so after the close, it's Apple and many others. I don't know who else is reporting earnings out there, but it doesn't really matter. We're going to look both bullish and bearish. Right now, the New York Stock Exchange is somewhat bullish. Yesterday, we saw the price oscillator, not the price oscillator, but the advanced decline oscillator moved right down below zero, just slightly, minus 1.83, not a big move. Now, today it's back up above zero. Ordinarily, you might say, hey, that's bullish. That's bullish as long as tomorrow it doesn't get back below zero. If it gets back below zero, that's actually a bearish connotation with regard to the New York Stock Exchange. We have not seen many bearish connotations yet inside of the New York Stock Exchange. In addition to that, it could also form its island top out there, suggesting what? A move lower inside of the markets. Does it mean it's all over? That's it. The highs have been put in. I am absolutely not in that camp out there. And I'm not in that camp because the advanced decline, both volume-wise as well as just issue-wise, has made new all-time highs inside of the New York Stock Exchange. That is not how the New York Stock Exchange forms its top. It is that simple out here. Let me see if I can do this. And I haven't updated my chart. I've updated my spreadsheet. I haven't updated my chart. Maybe I'll get a chance. I don't know if I'll get a chance to do that tonight. Let me see if I can turn this on. Well, if I take a look at the summation index, it'll give you a pretty good view. But here's the summation. Let me do this. See if I turn this off. Oh, that was pretty stupid. And of course, I was referring to myself out there. I am allowed to call myself. Stu, you can call myself. You can call me that too if you want, but I won't think kindly of you. But I can certainly do that. Why can't I turn? Oh, there we go. You see that? Okay, there we go. I'll go ahead and move this to the upside out here. You can see as I take a look at the summation index out here, inside the New York. When it turns green, by the way, it's telling you the trend is to the upside. The market trend is the upside. When it turns red, it's telling you the trend is to the downside. And it's one way to use it. It's a good way to use it from a trending tool. But you can see here, and I don't have the adjusted version on my screen, but you're basically, you are above the highs from back in May of 2013. It does not end like that. That is not the pattern of the New York Stock Exchange when it makes its tops out there. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I have a request to go take a look at a couple of instruments out here. The first one being Kellogg. So let's go ahead and have some cereal out here. Now, this trader is short Kellogg, and the question is, I'm short K and Pep. Can you tell me support? I can. Now, interesting, the pattern here that Kellogg made a little 3 drive to a top pattern out here. And if we take a look at it, drive one ended up being on trend. This one is actually was perfect. You didn't have to, this was not forced or anything. We're just taking a look at the number of trading sessions between the first high that we're looking at December 30th, the second high that formed out here on February 17th, and the third high that formed out here April 4th. So you've got a 3 drive to a top pattern. Now, inside a 3 drive to a top pattern, your target with regard to the short side of this trade out here, and you got a nice little reversal signal right here, this little bear sash the very next day on April the 5th out here. So if that pattern comes to full fruition, your target becomes the bottom of that first drive area, the swing point after the first drive started, which is right here on January 20th. And that's somewhere between $68, $73, and $71, give or take a few pennies out here. That becomes your target. Now, that was not the question that was asked, but I certainly want to go ahead and throw that out there. Now, in this case here, you're going to be watching, as far as support levels, you're going to be watching, well, let's do this. I got 3 minutes. Nobody's written anything else in, so we're good. I can cover both these issues, I believe. I'm going to turn price off. And here's what we know. We've got a brand new daily profile that formed above the prior daily profile. Now, the bottom of the box is at 76.28. And you are trading below 76.28. You're at 75.29. That's a good thing. So you've broken a level of support out here. The next level of support to be watching inside of Kellogg is going to be 74.07. Now, as price moves down to 74.07, if it does that, what you're really focused on is this swing point here from April 22nd, just a few days ago, that had 1.2 million shares. Why? If you take that out with volume, what you're going to do is you're going to form an A to B equals CD to the downside. And that would give you, at least initially, a price projection, assuming that the highs of today, yesterday don't get taken out. That would give you a price projection of around, well, at this stage here, I would say your price projection is more likely around $70 out here. And the one-to-one is 72.72. I'd say that's not likely to occur. 71.80 is 1.272. I'd say perhaps. And 70.63. So you got a 3 drive to a top pattern that confirmed. That suggests you're coming down into the January 20th type level. If you take out that swing point from a few days ago with volume, that is just confirming that pattern out here. So I will say at this stage of the game, nice trade on Kellogg. The next equity to look at is ticker symbol PEP, PepsiCo Inc. Also short on this. If we take a look at this pattern out here, I don't see a valid 3 drive, so it doesn't have that pattern out here. As we take a look at it, this made a most recent swing point out here on April 21st with 7 million shares to the downside. Yesterday was a bounce up with 3 million shares. There was also moving down with 4.5 million shares on the trading day of April 20th. So, and this has significant resistance right up in this level right here. You can see we've got a brand new TAS daily profile that formed 2 trading sessions ago. And it is set up with what? It is set up with regard to a bearish connotation, a bearish tone to it. I say that because as I turn price off here, you will see that that daily, brand new daily profile, which formed both above and below the prior profile out here. This is set up to be bearish on the daily, and you've got a top level of the weekly, that green line, that is resistance. So where is support on this thing here? I would have to say, and that was the question, you're looking at 99.19 inside of PepsiCo, PEP. Folks, stay tuned. Our man David White is up next. Then you've got the Tom O'Brien Show. Andy Heck to bring it on home. Have a terrific Tuesday. I'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.